What's happening, guys? We've got another Sunday scan coming at you, this time for March 14th and the week ahead. Just an absolute insane week last week. Had my best day ever, and I don't think we could have been more prepared on Sunday video than we were. Going over, why you should not underestimate that sector move, and then on top of that, also capturing the downside, being able to flip that bias when it was time. So on March 8th, you saw me tweet that HUSA and IMPP and basically that entire sector reminded me of the exact same setup that we had on DRYS back in 2016, along with SINO and TOPS and the rest of the shippers that absolutely went insane because DRYS went from 5 to 100, which what else did? INDO just about, right? It went from 5s to 80. And then we had all these other sympathy sector trades that just kind of followed suit. So it was the exact same thing. And trading is all about, where have you seen this before? And what did it do last time? How did it react? And of course, there's always going to be those outlier moves. There's always going to be those events that, maybe do not follow the exact same steps. But over time, if you compare these things, the probability is on your side. And so the game plan going into March 8th, which we went over in the broadcast, was that I felt everybody was going to be afraid to short. And the reason for that is because if you tried to short on the 7th, it was just a steady grind up. And it just exhausted everybody out. And the whole concept that we always talk about is do not pre-exhaust. If you pre-exhaust, you're going to miss the downside. You're going to second guess. You're going to be scared to short that next day. And that next morning, March 8th, we had some great moves off the open, squeezed everybody out, came in, pushed back up, 945. That's it. And it worked out perfect. I don't think that there could have been better preparation for that shift. And one of the main things I think that you should understand about these sector trades is, it's just like the VIX, right? The VIX volatility. When the market's going down, typically VIX, spikes, which is basically suggesting that, there's going to be a lot of volatility. As soon as that fear is gone, you start to see the VIX just completely kind of collapse, right? And so the thing about this sector trade on oil is there's just this fear of the unknown, and where it stops, nobody knows. And as it's going straight up, everybody in their mind is 150, 200, but you don't really know, is it going to keep on going slowly 10% every single day like it was? Or when it finally does hit that peak, now whether or not that's the peak for long term or not, we don't know. But as soon as it hits that peak for a moment, all of that fear and uncertainty and everything unwinds. That premium that's built up unwinds. And that's exactly what we happened when you saw USO and crude and basically, just absolutely get demolished. Everything came out on premium side on all these other trades that, shouldn't have even been where they are. And they traded well, they had a great market, but really, do they support these 100, 200, 500, 1,000% type moves, or are they just a product of this bull market in oil? And that's exactly what they were. So, something that I don't normally do is swing short. So you saw me swing short on those. That was the idea for Friday. Scaled into the trade Thursday and Friday. And just complete unwind throughout the day, which was phenomenal. It's been great for the sector as a whole. Or small caps rather. But I know that a lot of people are going to lose a lot of money again just because they think that everything's going to act the same way. And all these other small caps that are moving are not part of some underlying sector. It is just what we talked about. The one and done type opportunities where there isn't this overreaching demand that just never seems to go away. And we had that because it was a sector trade in oil and gas, crude, everything just kept on going straight up. So dips got absorbed until they didn't. So anyway, fantastic opportunities. And we've got a lot to talk about today. I will try to condense it as much as possible, and I think I can do that because, Scan, I've got some watches, but it's not a market where you really need to do a whole bunch of planning, like I'm going to do this if it does that, but more so just kind of seeing what opportunities are out there and what you potentially might trade, so that you can just act that much faster when it happens, and set those price alerts and wait for things. One of the best things that I did, in my opinion, last week was flipping the bias. So one thing that I've tweeted multiple times over 2021, I think, one of the goals that I wanted to do to get better as a trader was, a lot of times I might get these great breakout trades on the long side, and then I don't short them back down. Or if I short something and I think it's going to rebound, obviously I cover. But if I think it's going to rebound, why wouldn't I get long? So I've been trying to work into, changing that bias and flipping the trade. And this week I was able to do that multiple times and performed exceptionally well. And the two that were standouts was GFRI and HYMC. And HYMC was a fantastic swing trade from about $1.10, $1.09, went all the way up to, I don't even know, almost 3, I guess. Something like that. And what was it? Yeah, 250s or so. 250s, 255s. And then GFAI. And that one went from 65 cents that I took on the long side to about $1.05-ish, I think was my max sell. And then I started to short it between basically 110, 130. Waited for that backside to kind of come in, and then sized in and ended up fading it back down. So if I was to really be proud of something that I did last week, it would definitely be that. Maybe the swing trade. It's all about progressing as a trader. There's all kinds of new things that you can learn. There's always new ways. Normally, like I said, I don't swing short, but things have been just crazy good lately, and so I wanted to kind of expand the playbook and let those trades work. So it worked out, and whether or not I continue to do that, I don't know. I think it just depends on the environment that we're in, and kind of what the opportunity is that presents itself at any given time. So before I go any further, t-shirt time. Justin Slay, you've got the free t-shirt. All you guys got to do, leave a comment below, leave a like, put the timestamp, whatever your key takeaway is. You guys have been seeing the videos that we do on social, but we're also condensing those into now some short 3 to 5 minute clips for YouTube as well. So you guys will be able to check that out too. Free month of Investors Underground to Jazz Nola. And that's that. So let's get into the video topics. So two things. One was, where have you seen this before? So we already kind of hit upon that with the oil and gas, right? So we had seen it with the shipper index before. We saw the exact same kind of play out where 945 peaked. And I had also tweeted that pre-market. Somebody had asked me, what do I think? Okay, sure, it's like the shipper, so what does that mean? And my response was a complete 180 by 9:45 a.m. So, as obviously it's if it's breaking out, complete 180 would be opposite by 9:45 a.m. They didn't see any higher after that time, and it was fantastic unwind throughout the day. But unrelated to that was something like AGRI. Now, AGRI had a phenomenal move from low ones to $5 and crazy volume, but the move did the exact same thing as the last time that it ran. So I can post the two charts and you can see exactly how it played out this time compared to last time, and how you can kind of utilize that to, think about whether or not it might be a good short or whether or not you should be a little bit more safe. And I think what's happening here is that there is a lot of people that are that got rewarded for doing the oil and gas trades, which were part of the sector. So they use that same strategy into these one and done type trades. And they come in, they hold, they want to wait until it's, $10, $15, because that made sense on the other ones. And then they end up overholding, they end up with a big bag. So always look to see how things have reacted in the past, and always look to see what similarities they might be either setting up with or share with a move that they've done before, or another sector. So I went over the demand and the supply, kind of understanding the last week we talked about why I thought that sector was going to continue to go crazy. You've got demand from the longs, demand just because things continue to go up, but you've also got demand from all these shorts that just keep on trying to find the top, trying to find the top, trying to find the top. As soon as that fear goes away, as soon as that peak comes in, all of that built up premium and demand goes away, and then you start to have reality hit. The problem is that you want to take advantage of the liquidity, but when the liquidity's there, that's when it's most choppy, that's when it's hardest. And it's hard to swing something like that. So you just have to position accordingly so that if it does open up higher, if it does have a ramp, if it does do a move that you're not expecting, you have room. And the goal should be to want to add. You want it to go higher. You want to add to that position. And if so, then you're positioned correctly. If you are afraid if it's going to uptick, if you're afraid that it pushes a little bit more, then you probably are too big for that current either risk profile on the name or current setup. So that, I think, is really important, and I think probably screwed up a lot of traders, is just missizing, not taking the proper size on the trades and giving yourself a big enough big picture, more of a macro style look. A lot of people come in, they look at the volume, they look at the move, and all right, I'm going to nail this, but they fail to kind of think about, okay, if I'm right, look how far it's going to go down, right? They just want to get in there and while they can size in, but the reality is you got to take a little bit less risk and let the trade work for you. Otherwise, it's tough to let that trade work. It really is. And you'll get chopped up, you get chopped out. And so never underestimate adjusting share size a little bit to give yourself more wiggle room to let that trade work. Let's see. The higher things go, the more patient you can be, right? So the way I look at it is, when these AGRI type moves, it's fine. I might put a little bit on just to, make sure I'm staying familiar, make sure that I see it. But I'm not going to scale into that trade until I see the exhaustion move, until it starts to break down, until that sentiment shifts. And now all these dip buyers are trying to sell every single pop. I want to be on the same side of them. And the higher it goes, the more it's going to unwind after that initial pullback. And most people are always afraid to miss that initial pullback. How often does that initial pullback end up being $1 higher than you first started shorting, right? Think about it. So the higher things go, the less you have to worry about missing the trade. Because once that shifts, there's a lot of downside still potentially available. Last comment I had was IPO liquidation. It continues to be something that we've seen. Rivian, RBLX, even like U and UPST and LMND, I think was another one, and even Zoom. All these names that kind of IPO'd in 2020, at some stage, are absolutely getting demolished. So I think that it's worth just seeing those charts so that if and when they do have that bounce day, you can be there, because the amount that they've faded when they do bounce, it's going to be a nice day. It's going to be a nice 10, 20% type bounce, which On those types of names, you can size, and if you're familiar with them and you know just how far they faded, you know that they have potential just to kind of rebound. And it doesn't mean try to find the bottom, but I always try to keep an eye on these things so that I know where they're at in their moves, so I can take advantage of them if and when I do see maybe there's a PR, maybe there's some type of breakout, whatever. And it's just always good to kind of go through these charts and just see them. So that's that, and I have two other things that I was going to go over once I'm sharing my screen just to kind of discuss. You guys saw liquidity trap from last week, CYRN, I'll go over that, but you guys saw what happened with that one, and it more than doubled. I want you guys to understand what that means. What is, the liquidity trap we always talk about, so I don't need to go over that, but reminder as to what happens when the cover comes in, right? And what that means to you. So I'll go over that. One other just big warning is all of these trades that I trade have a naturally driven market, right? And that's why a lot of these you see play out really, really nicely. You saw CYRN play out. You saw HYMC play out really, really nicely. You saw all these oil and gas type trades end up being really, really nice. The difference between actually trading, real names, real volume, real momentum versus some of these that are manufactured that you see on social networks, different platforms that are, attempting to manufacture a breakout. The difference is, number one, the volume and the momentum. You're talking about a lot of people with shares that maybe they've got size, but it's working them all out of smaller and smaller and smaller size. It's spreading it out amongst many, many, many different traders. And the difference between trading real names, real momentum, and these spots, these social places that create or attempt to create momentum is you've got a few shares, or actually a lot of shares in a few hands. And so then when it goes up on air, all those shares come out. So you see this ramp up and ramp back down. And it happens too fast. And it's really the first in, first out. And if you chased it, good luck. You're screwed. And you saw that on AMPC as well as a few others this past week. And so SISI was another one of those where just complete round trip. Went up, dropped 50% by close. Be aware of that because everybody wants to sell you on the next XYZ, right? Right after something else just went nuts. And pretend that they called that, and then they sell you on this next one. And meanwhile, there isn't a naturally driven, real momentum, real liquidity in that trade. So be aware of that. Be cautious of that because that's where you're going to lose a lot of money because it's so easy to say, hey, this is the next XYZ. And everybody jumps, jump. How high is basically what people want that join, these folks that are flashy and make alerts, make calls. You will lose your shirt. Be careful of that. So let's get right into it on the screen and we'll go over a few things and then get into the scan. All right, guys, so for the second part of the scan, as you guys know, typically I go over this scan kind of ideas for the following week, but I wanted to go over two things beforehand, which basically are, the liquidity trap playing out and when, in my eyes, it's okay to chase depending on the market. But first and foremost, as you guys know, I am not a financial advisor. These are not buy or sell recommendations. This is for educational, informational purposes only. If you have a problem with that, shut the video off. If you're good with that and you want to learn and understand what may make a good trade, what, in my opinion, turns into a good trade, what I need to see for a trade to kind of make my radar, then you're in the right spot. But if you're looking to be told what to buy or sell, you're in the wrong spot. So I'm sure you can find that, lose a lot of money, but best of luck to you. So CYRN, we talked about this last week, basically the last 2 weeks. And it's been a very popular thing. Typically, it's when there's just this huge amount of volume that comes in, but the stock does not go away. There continues to be a buyer in the tape and what appears to be shorts stuck. So when you have this huge move, which was fantastic, by the way, I had my best day ever. I left. I was in my car. I got back to my desk, and this thing was at like $13, and I was like, "What is going on?" And so I ended up selling 1280s, 1250s, 12s, which was fantastic. But then what I want to go over is, obviously what happens next. And so the idea started over here, and you could see that each day I was kind of wicking up, but it was never letting shorts out, and it was continually kind of ripping up, consolidate, rip up, consolidate. And then so finally it took off. And remember, and I always go over this, but I'm not going to go over what a liquidity trap is, because if you guys have watched any of the last 15 Sunday videos, you should know. Or if you're in the room, you should know. But what is actually happening in a liquidity trap, right? It's the cover. So if the cover comes, what does that mean to you? That means that's your exit. You cannot expect that everything is going to pull an INDO, right? INDO obviously went nuts. If you always hold out, looking for that outlier move, more often than not, you will lose on liquidity traps. You need to be proven. A lot of times they'll go up to those key levels, and they will either retrap and go nuts, or they will squeeze out and then fail. And that's where your edge is. That's where you start to get that information on how it reacts at those prior key levels. So obviously INDO was an outlier event. And if you try to treat CYRN as an outlier event, no matter what, you should be selling into the squeeze, because you're anticipating the liquidity trap to play out. And that is the squeeze. So you've seen this a lot of times. You've seen it, Cala even. You've got this volume, and then you can see the wicks again. So if this were to squeeze out Monday and Tuesday, and you're still hanging around, then are you on the side of probability? You're on the right side of the trade, but if it exhausts out and you're still there and you're still waiting for more, then your risk is obviously a little bit higher. That doesn't mean that it can't trap again and then continue to go on. And we've seen that happen plenty of times. But just be aware of it and understand that that's exactly the way that these things are supposed to work. Same thing. HYMC, you've got a monster day, 202 volume. Next day, 46 million, and all of a sudden it retakes. It was a gapper, retakes the prior trend and squeezes out. Are you just going to sit here and wait all day for it to go to 3 to 5? Or does it make more sense that after it exhausts out a few times and it puts in a top at 250 that we discussed in the room, does it make more sense to get out, potentially short it down, or at least sell a good portion? So make sure that if you are trading liquidity traps, you are taking advantage of the exit, because at the end of the day, you are anticipating that a squeeze is going to come in. If a squeeze comes in, that is the exit. So, last comment. GFAI, right? So you've got a nice little setup over here. Normally, this would not even be something that I'd probably trade. But given that we had 5, 6, 10 trades that were 50 cents to $2 recently, this GFAI move ramps up to 65, consolidates, starts to go again. To me, that's worth starting into the trade, because in this current market environment, it is rewarding chasers. So as long as, not the first swipe, I don't want to be part of that first swipe, because what if it's just one buy? Right? So you want to see it pull back, consolidate, and prove that it's going to hold trend. And if it does, at that point, I'm interested. So then we obviously had that nice blow-off move. And you can see that it went straight into looking left resistance. And then if you did any basic fundamental research, you saw another reason as to why there would probably be some inventory at the levels that I was shorting. So let's get into it for tomorrow. HYMC, higher the better. Like I said in the room, my goal into the close was potential squeeze out towards VWAP for a potential reload. So covered in here, and I posted all that chart. You guys can see it. But most importantly, look left. Where is support? Where are they soaking it? So you have an edge here to absorb, to cover, and expect that it's probably going to base here, especially in this market. If it doesn't, you can always react, right? But in this market, you should expect that it's going to hold because everything is holding longer than it should. Everybody that was expecting it to break now got squeezed out because they were oversized and stubborn. And that gives a nice opportunity for you to go ahead and add back. And then obviously you see it came back down to that level. My thought is it gaps down. It may not. I hope that it doesn't. I currently have some still short, but I'm hoping that it gaps up because I'd like to see a nice exhaustion move and fail to follow through. But in my opinion, it ends up fading. I think they squeezed everybody out, and we'll see what happens. So hopefully we get an opportunity. Hopefully it pushes up. But if not, all good. OXY, great trader if you behave. I behaved a couple times. Well, later in the week I behaved a couple times, and there was a couple times that I did not. And I don't remember if that was this week. I don't even remember now if it was last week or this week. But one of the times I had started in, and then I overstayed on the starter. Then that starter turned into an issue just because I was being stubborn with that starter. Sometimes it's better just to size in because then you just respect your risk. But sometimes if you start in and you're thinking it needs a dollar range and it goes 2 or 3, obviously that starter position turns into a little bit of a ding. So the last couple days on it have been fantastic. And honestly, the easiest way to trade is when you think it's about to just flush out, it's a cover. When you think it's about to break out, it's a short. That's not a buy or sell recommendation. That's just how I have perceived it over the last couple days and how I've been trading it. But I do think we're going to have a phenomenal trade here. You can see that it's been having issues in this range. Just call it 58, 50s, 59 range, right? You can see that each time it gets up there, it gets exhausted. So there's definitely inventory coming out, but at the same time, somebody is continually on the bid, absorbing. So we'll see what happens. I'd love to see this thing go 60, 62, some type of blow up. But when it does break down, it's going to be a multi-day kind of pullback. It's going to go $2, $2, $2. So there is no rush to get in there. But it has been a phenomenal trader as long as you respect the trend. If you don't, it's not your friend. I can tell you that firsthand. GFAI, higher the better. Failed follow through is ideal. I would love to see it get back up towards this level 85, exhaust everybody out, and then start to fade back off again. It could definitely hang around. It had some great volume. So if we did get a setup and it ramped 85, 90 and it faded off to, back to red, 75, 70, I don't think I'd be waiting for 50 cents. I just think that at that point you're waiting for another 10, 15 cents for a risk of 10 cents. It's just not really worth it for me. BMBL, higher the better. Failed follow through. Feel like it did that kind of crutch gap up, and then it since has faded off. So any pops, I'd be looking to fade, depending on the market. If the market's up 500 points, then obviously this probably kind of reacts with it. USEG, HUSA, IMPP, NINE, and ENSV. All the same thing. So, in my opinion, look for relative weakness. Look for the one that maybe is nearing breaking down, but hasn't yet. Look for all pops. Watch it with, obviously crude, but for the most part, these really have no business here. They will have big bounces along the way, so you have to be aware of that, which is what I was getting at with watching your size. Think more of macro. But I covered everything on Friday. I am hopeful for higher, but I do think that If the market does not make, or if crude does not make any major move to the upside, I do think that there's going to be some downside pressure on these trades. So I do think that most people will take these off radar. I think that most people are kind of exhausted from them, but I do think that there's still a lot of potential because they came from literally nothing, and they're up here at ridiculous levels. No matter how you slice it, no matter where crude goes, it doesn't make sense for them to be up here. So I do think that the general trend will be down, but I want to be proven. I think that there'll be nice daily traders. I think there will be opportunities every single day off of strength. Just be aware of that day that it does hold on, because these will bounce along the way. I am sure of it. Continuation side, Stab. Stab was a nice little trader on Friday, and you can see it. There was a nice little soak there at 75 cents or so. So it started to go up when there was a tweet that the UN is extremely concerned about Ukraine nuclear facilities. So given what Stab does, that's kind of the sympathy type trade for any tweets like that. You saw the first time of a nuclear threat, this thing had 20 million volume, and then it had since sold off, and there's been a little bit of a bid since. So, we'll see what happens. If those kind of threats continue to go, then obviously people will probably chase this thing, but it's nothing to chase, and you want to assume probably that 75 is going to have an issue, but it did have a buyer coming in there. So, I'll be curious to see if it starts to base. As long as it holds over 70s, I am going to be participating in dips, but if it starts to get heavy, then I will not be. If it goes nuts, obviously I'd be a seller, but I still have my swing trade from last week. We've got Wolf. Nice squeeze out towards the close. In my opinion, there's still some shorts in here. So I'm going to be watching for a weak open, consolidate, maybe a little bit of a trap. And then I'm thinking that it could potentially rally back, could even go into circuit halts. 6-7 million shares traded, fast move 5 to 10. Ideally, we get some type of move 12 to 15. I would trade a weak open red to green, but I would not expect that it has to do anything. I want to be proven right. If I'm wrong, then obviously I'd be looking to, hopefully fade it back down 6-7 range or something like that after an exhaustion, after it kind of attempts to rebound and fails, fails. That's what I'd be looking for. So we'll see what happens with that. But I would love to get long for that circuit back up, but I do not want to assume that that's going to happen, because if you get too long bias and it just kind of ramps and fails, you'll end up with a bag. So I want to see it be proven, and I think over this sort of 930s level, if it starts to get strong and bid up, then I really get interested. Cala I did not participate in, but it was a great call all around. There was a bunch of traders in my room that were focused in on it. Decent volume day this day. Usually I like to see like 100 or 200 million, but you saw the wick, saw the wick, saw the wick. And then on top of that, you've got this kind of should have died, kind of setup here. Fail, fail, fail. Why would you not be short? Why would you not be holding short? And then all of a sudden it goes back up to the highs. So in my opinion, shorts are definitely stuck, but you can see that we've got a top here 1 time, 2 times, 3 times, right? So you should assume that 170s is going to be top, but if it starts to break out over that and base at 170s, in my opinion, based off of this action right here, you probably have shorts trapped. So I would love to see it kind of base at 170s for maybe 220, 250. But for now, you probably want to assume that 170 is going to have a little bit of trouble. Not long, not necessarily looking to go long, but I want to stay familiar for when the trade does reverse. But if it does build, just like HYMC on Friday, when I said, I felt like shorts were trapped early in the day when everybody was hammering it out of the open. And we had that huge, almost dollar per share rip. And so that's a huge opportunity. So maybe we have something like that where everybody hammers it down, it squeezes out, and then it, fades right back. We'll see. ARTW, you can see a buyer staying in the tape here. You can see on the daily chart. This is just one of those where I feel like you look back and, I had been watching this actually for a long time. I'd seen this for many years in this range, but, it's got a buyer and it looks like somebody's been absorbing it for quite some time. I actually saw this and I said to myself, I need to put some on. And then I missed it this day. I ended up putting some on at like $4.99, not much size. And then it took off again, So I am hopeful that it actually pulls back. I'm hopeful that it pulls back 10, 20%, something like that, and gives some opportunity. But it's one of those where I might just tuck away in the IRA and see if it continues to go. If it has a ton of volume and downside pressure that holds, then obviously I'll kick it off. But you can see on, right here, you can see that it actually came down. So if you're chasing, strength, then I think that's silly. But you can see that it actually does have, weakness. Sometimes it gaps down, flushes out, etc. So just an idea, but it's a thin name. And it's not really a momentum trade, and I would definitely not day trade it for sure. REVB, this one was fantastic from, I think it was Wednesday. The idea was around 110, 115s. Ended up doubling almost. Like I said, 180s, 2s, make sure you're locking in, because that was 100% almost in a couple hours. But Tuesday catalyst. So as I said in the room, I want to see 130s kind of base and firm up in order to participate in it as far as any ads or anything like that. So I did not add back anything that I sold 180s to 2s. I still have a little bit, but nothing that I'm excited about. But if 130 starts to base and maybe they drop a PR before the conference that they have, then maybe we have a play. But BFRI is also at that conference. 99% of the time, these things, the conferences don't matter. But in this current market, if they put out a PR, if people get excited about it, then it's potential. So nothing that I'm excited about. But if they do check those boxes and the volume comes back and it does go back over 130s and holds trend, then I'm potentially excited about it. So I think that's about it. Hope you guys have a good rest of the weekend, and we'll catch you in the room tomorrow.